Well, ladies and gentlemen. Not even my live stream could sustain itself. Bitcoin has taken a very interesting move to the downside. Not even a shoe bag. It was a suitcase full of weights. It's just dropped down. Now, a lot of people are like, yeah, baby, let's get with the discount. Maybe. But there could be more blood across the street. Now, I ain't here to FUD you out, ladies and gentlemen. I'm going to be presenting to you some facts on what we're witnessing that's happening across the board. And by the time we're done with this video, you should be aligned with enough information that's going to make you say, maybe I should wait. Or if you're that kind of guy, straight in, baby. That's what we're all about. Diamond hands and all that palaver. Let's get to the program, ladies and gentlemen, to help you understand exactly what's going on. So it starts off with this article right here. Now, some of you might notice that this was said on the 20th of June this year. The Bank of Japan warns of potential hit to lenders from rising rates. When they mean rising rates, it means the actual yield on holding Japanese bonds. So the problem that the Bank of Japan had is they were putting out too much money because of how high their yields were. They couldn't sustain it. You go over and have a look at what's going on with the Bank of Japan. You can see that the red line in principle is the dollar yen. And you can see that the dollar was outperforming the Japanese yen. And naturally, when the dollar is going up, the yen is going down. And when the yen is going up, the dollar is going down. But what's happened right now is the yen is flying up and the dollar is taking a mad move to the downside. And that doesn't make sense to people. Why? Because when the dollar is down, logic says that you'd be going into other assets like Bitcoin, gold. I mean, Euro is seeing the beauty of this move. Check this out. Look what's going on with Euro. You only need to just say to yourself, okay, looks like I should be getting into Euro because Euro is breaking up to a very important range right now to the 1.10 zone. And that hasn't been seen for quite some time. Going over to the dollar itself, you can see that the dollar has taken another shoe bag and it's just breaking down, even though it's still appreciated by 1.8%, considering that it was around the 6% mark not so long ago. You can see what's going on. And then we even go over to Bitcoin. I mean, I'm going to be helping you make sense of what's going on with Bitcoin, but Bitcoin is collapsing right now. And it's all because of what's going on with this article right here. Now, you may have heard me talk about a specific strategy that most institutional investors actually utilize every single day. And they do it all the time. And that's the carry trade principle, which involves borrowing a low interest rate asset, for example, the Japanese yen, and then converting that into another asset, which is the dollar. And then with those dollars, you're then going out and buying Bitcoin, NASDAQ, Forex, commodities, stocks, you name it. But what we've seen happening with the Japanese yen is it's been happening for such a long time to the point where the Japanese are like, this is going to be a problem for us, because if we have a higher yield, that means if we have to pay Japanese bond investors more money, that's going to break us. It's going to cause a big problem for the Bank of Japan. Now, if we just go over to this article right here, you can see that it says here that the Bank of Japan confirms a 36.8 billion currency intervention as the yen has been so weak. What this really means is institutional investors have been loading up on the carry trade principle. So you can see, look, the Japanese yen has been going down for quite some time. Looking at the chart, you can see it's just going down. It's just losing its value, because investors in Japan are taking Japanese yen and borrowing that yen because the interest rate is low, okay? And when the interest rate is low for them, that means they're effectively getting free money. And then they're taking that money and going into assets such as the NASDAQ and the S&P. Look at the NASDAQ. You can see NASDAQ all that time has been going up. So the carry trade principle has been happening. But it's now got to a point where the Bank of Japan have got a little bit concerned about it because they're now having to intervene, which is why we've got this $36 billion coming in to the Bank of Japan, or to fuel the market. Now, we go over to the bonds market itself for the Bank of Japan, because this is important and it's going to lead us into understanding what's going on. You have a look at the 10-year bonds market. Look at that. It's shooting up. It's now at 103. The yield on the Japanese yen is down. Because if the yen, okay, or should I say, if the Bank of Japan sees that their yield is still high, anything above 1% for the Bank of Japan, they're doubling their deficit, and that's going to lead to chaos. You go over to this article over here, and it says it as quite simply, this negative reaction of US equity prices will be exacerbated in a financial repression, as the carry trade investors will be forced to sell at the same time as Japan's financial institutions are forced to sell to purchase Japanese government bonds, as directed by the Japanese authorities. So to make sense of it so far, the carry trade principle means that investors effectively are borrowing the Japanese yen, and they've been borrowing that yen for quite some time. Now, that doesn't mean it's just the Japanese investors. What about all the foreign investors like the guys in the United States? Hedge funds, institutional fund managers. They can see that holding yen and borrowing it because it's a low interest rate asset means that they're effectively getting free money. They then take that yen and then they go and sell it and convert it into dollars, which is why lately we've seen the Japanese yen is so weak against the US dollar. That's why the dollar has been going up, because people have been buying what? They've been buying stocks. Look at the Nasdaq and the S&P. They've been making significant moves to the upside. 40-year highs, like they're going crazy right now. But now that the Nasdaq and the S&P are pulling back, it's all because of this Bank of Japan intervention and this story with the carry trade. Bank of Japan has told all the institutional investors in Japan, you need to sell up those liabilities, guys, and you need to put your money back into the Japanese yen because we can't sustain ourselves. So all the authorities in Japan have instructed all the institutional investors in Japan to get rid of your assets overseas and put all your money into the Japanese bonds to save our economy. Because if you don't, we're going to end up going into the bin. That's why we've seen this sell-off across the board. That's why cryptocurrency has dropped. Well, let me just put some stats for you regarding cryptocurrency. Did you know that the volume of trading in Japan is to the sum of 24 trillion yen? That equates to around $168 billion. So if the guys in Japan have been buying up cryptocurrency and using the yen to do so, well, they've been told you better get rid of that and put your money back into the Japanese yen. That's probably why Bitcoin has been coming down. It's got nothing to do with any liquidation. It's got nothing to do with any whales or anything like that. Because when you think about it, the ETF, BlackRock's still buying Bitcoin ETF, not in massive sums, but they're still buying the ETF. But what's going on now? Domestic investors in Japan are being forced to buy the Japanese bonds. Foreign investors who have been using the Japanese yen to go and sell it are now being forced to actually get rid of that liability, which means the dollar's going down against the Japanese yen because they're selling their dollars to get out of the risk of what's going on in the Japanese yen. Why? Because now, with the Bank of Japan increasing their interest rates, it costs them more money to hold yen. Now let's break down a little bit of price action on BTC because it has been pretty crazy across the board. But you guys now understand why this carry trade principle has fueled this mad move to the downside. Now we're going to be getting the price projections of Bitcoin. 39K Bitcoin, 34,000 Bitcoin, $10,000 Bitcoin. Now an article come into play over here, and it says here that there is, where is it? Over here. US economist warns Bitcoin is heading for a crypto graveyard. Okay, so it says here, Peter Schiff, he's warned that the maiden digital asset may face further losses. And Schiff expressed frustration and skepticism regarding Bitcoin investors' attitudes, accusing them of being in denial about the true state of the market. Well, guys, look, you've just seen the reaction to what's going on with regards to the Japanese yen. Remember, institutional investors who have been borrowing the Japanese yen and then selling it to go and exchange it to dollars to then go and use those dollars to buy Bitcoin, gold, Nasdaq, S&P, commodities. They are now being forced to sell that dollar and then convert it back into Japanese yen because the Bank of Japan have increased their interest rates. You've got to ask yourself, United States Federal Reserve, what are they looking to do? Cut the interest rates. What has the government of the UK done? Bank of England, they've cut their interest rates. The euro, cut their interest rates. But the carry trade, where everyone is exploiting the low interest rate on the Japanese yen, well, they've just increased their interest rate. And that means all the guys that have borrowed Japanese yen are now going to have to pay more. They don't like that, so they now need to pull everything. So to break it all down for you in terms of day-to-day price action itself, now the impact of what's gone on with the Japanese yen is hitting the marketplace. Will it end overnight? I don't think it will end overnight, guys. Now, for the guys who are buying Bitcoin right now, I would consider this as a short-term play. Going over into the 1 hour time frame, you just got to be very mindful that Bitcoin is looking like it wants to make a nice little move above towards the 56,000 zone. We've got red vector candle regions right here. And naturally, during these instances, when you see a lot of positions, or should I say the markets have been dropping to the downside, lots of short positions have been opened, and what's going to be fueling a recovery back up is investors going to buy to cover, because when you go short, you sell. But when you close that position, you're buying to cover, which is what's fueling this move to the upside right now. But it may be short-lived because there is a blue vector candle region right here that Bitcoin could come and attack. And going into the higher timeframes on the daily chart, you can see that we have got a vector candle region down here at 44,311. Now, with this unwinding of the carry trade principle, and for anyone that is new to the channel and wants a little bit more information on the carry trade principle, for anybody new, you get 20% discount on the Platinum membership, where I go into detail regarding the carry trade principle. I did this last night, which is marrying up to my position with the NASDAQ. So I changed direction on the NASDAQ on Friday, and I ran the shorts because of what was going on with regards to this Bank of Japan story. And now I'm in a profit of $2,600. It was around $4,000 for the day, but I'm still expecting the NASDAQ to continue its move to the downside because we are now waiting to hear whether the Federal Reserve is going to increase its interest rates. And if they don't increase them aggressively, then that's going to do what? That's going to make investors say, well, there's no point in me putting my money to work. Why? Because having the dollars themselves, interest rates are still high. So why am I going to go and put myself in that exposure? That only means what? Well, I'm going to go over and seek much safer assets, such as the 10-year bonds market itself. And that's why we're seeing the bonds market climbing up. So for anybody in cryptocurrency, I suggest you check this out. We look at Bitcoin and we say, okay, we do have a vector candle down at 44,311. Going over into the actual bids and offers themselves, you can see that we have got some offers coming into play, which will then sustain the idea of Bitcoin moving back up. But it may be short-lived, ladies and gentlemen. What's happened over the last couple of days in the marketplace, that means from Friday going into today, Monday, it's not over in my opinion. And quite frankly, when the yen gets cheap enough again, that's when it's going to happen. You go over to the yen itself, and you have a look at where we are in terms of the futures markets, you can see that the yen is flying up and there's still more room for it to go. And as long as the yen keeps on going up, you guys as Bitcoin buyers have to be very careful, because if the yen keeps climbing up, it means there's more positions being unwinded to take them out of dollars and put them back into Japanese yen to increase the value of the yen, because that's what the Bank of Japan needs to happen. They're making the domestic investors do it, and I'm guessing that all the foreign investors are going to be following suit, which is why you're seeing the NASDAQ and the S&P trading so low. Naturally, there will be movements back up, guys, but just make sure that when you are fading the market, that means when you see a sustained trend to the downside like this, you've got to then say to yourself, when prices make a recovery back up, you are taking longs in these ranges, make sure you're taking money off the table, because I don't believe that this narrative with the Japanese yen is going to go away overnight. Bitcoin might be a little bit more cheaper. That's good news, not FUD. Tread with caution when it comes to going on X and seeing people are going long and what have you. At least you guys understand now that the Bank of Japan's movements has encouraged investors worldwide to start moving money around. So what do you need to be paying attention to? Pay attention to the 10-year bonds market for the US. Remember, we're waiting to see if Powell is going to cut the interest rates or not. And how aggressively he cuts them is going to be the deciding factor if assets are going to go up again. Why? Because if investors have had to go over to the Japanese yen because the interest rates are low, then we're going to want to see the dollar's interest rates come down even more, so that can actually warrant people to borrow dollars and put them to work. But if the Fed comes with only 25 basis point cut, that's not going to be enough to encourage investors to want to take on risk. That means we're probably going to see investors still going into the bonds, and assets across the board are going to depreciate and keep on coming down until there's a point when the Fed says, you know what, we need to step in and and cut the interest rates even more to stimulate the economy, to get investors to start putting the money to work. If you've enjoyed today's video, ladies and gentlemen, mad love and respect. I'll be tuning in with you all tomorrow for another breakdown of the marketplace. Let's see what happens going into Asia tonight. So just remember, if you're fading the market, make sure you're taking profits along the way. As I said, Bitcoin might be a little bit more cheaper soon. Take care of yourselves, gang. Mad love and respect. Peace.